After the president's commentary in Davos today, technically remote commentary, the president's policy priorities are becoming a bit clearer. I've got a few, I think, early takeaways. The first one is that stocks still rank as the president's favorite gauge, it seems like, talking a lot about artificial intelligence, talking about technology, talking about keeping the Europeans off our back regulatory-wise, obviously talking some tariffs too, but so far just talk, which doesn't mean there's not action coming. Certainly likely to be, as we saw in the first administration. But as far as tariffs go as a major policy source, it doesn't seem like a priority either, actually. Kudos to Jeff Kleintop, by the way, who kind of told us the early goings might be more negotiation than actual massive tariffs getting levied. I think my risk radar was in pretty good shape yesterday. The subject of yesterday's conversation was that the chipmaker breakout combined with the strength in the overall market. It just looked like we were going to take that 6,100, turn it into a slingshot, which we did. Bonds still red and dollar green because I think there's still support for yields in the dollar. We'll see how the Bank of Japan thing goes. Maybe decent for some dollar downside, but still it looks like a chart that has been generally buying dips. So until we get major breakdown on the dollar, I'm keeping it green for now. Crypto green too, but one of my takeaways from policy is that crypto is at least third ranking. It's probably lower, to be honest, if you really wanted to kind of get through the nitty-gritty of the stuff that Trump's prioritizing right now. Number one is stocks and AI. You see it in the chart too, of course, for the S&P 500. You think he's not loving this first time around? One thing we learned is that he loves watching the stock market. He also talked about getting interest rates down, which, if that's a priority, then things are going to get really wacky, and we don't even have time to get into that right now. Talking about bringing interest rates down when that very action, cutting rates from the Fed the last 9 months, has led to yields going up. I don't think that is something we can even get into. Here are the charts. Firstly, S&P's already broke out. We'll get back to the wacky bond stuff on the central bank. Crude oil is priority number 2, it seems like. It's very much about the crude. I talked earlier this week, the notion that crude is not the solution to inflation. That's because it hasn't been energy prices, been a major contributor to inflation in a negative way for 2 years. So if it's not the problem for inflation, it doesn't really strike me as the solution. The chart also generally has been bearish. There's been support for crude in the low 60s, but I guess one objective of this administration is going to be to test those lows, which seems kind of reasonable already generally with the trend overall, which aligns with us producing more and more than ever and more than the rest of the world. So for crude oil, good luck, bulls, basically, is the message there. But for Bitcoin, though, for crypto, I don't know if crypto fans like being the third or lower in the priority list. It looks like the plan is to have a committee put together ideas led by David Sachs to then submit within the next, 6 months? I'm not sure Bitcoin can hold on 6 months to get the answer on the strategic reserve, because right now we've already heard about money going into big tech, data, AI, actual cash and orders, and we've already seen the notion of putting crude as a top rank. So if Bitcoin's got to wait 6 months to find out if it's going to be on the strategic reserve, and crypto hasn't gotten any money so far other than the Melania and the Trump coin, then that could be a problem for cryptos, because Bitcoin still is in my bearish divergence, whatever. Maybe I'm bashing my head against the wall, but that's what the technical chart says. It says that we've been making highs again while the RSI has been going down. It's bearish divergence, and it fits within the long-term bearish divergence. What matters to crypto, as always, is finding a new buyer, and if we got to wait 6 months to put together a plan, crypto right now is kind of looking like one of the riskier parts of the policy plays.